What an incredible day. Pi network is rallying while the rest of the market is rather calm. Now what's going on here? Who is buying here? Who's selling here? Let's have a look at the data most people are not considering. Let's try to figure out how much higher we can go from here and at what point it might make sense to take profit. So this is the top 100 cryptocurrencies and Pi appreciated by 60%. The chart looks pretty much like hockey stick growth. But how much higher can we go? Right now, we are at $1.26. Now, this is not the first video on Pi Network on this channel. I've published several videos before. And the very first video, 66 days ago, was extremely popular. It outperformed the average video by a multiple. Now, the last video, roughly 1 month ago, still outperformed, but not as much as the first one. Now, does this mean that the interest in Pi Network and in the Pi token is declining over time? Now, I'm not going to talk about the fundamentals of Pi Network again, how it's mining of a cryptocurrency via a phone, how there was an extremely successful referral program. But instead, we're going to focus on this current rally. Now, there's an interesting post on Twitter, or now known as X, how there will be an ecosystem announcement. But that announcement will be in 2 days. It's not today. And even that post had been 4 days ago. So where's the rally today coming from? Here's something interesting. This comes directly from Binance.com, a guest article. A whale bought 70 million of Pi 2 days ago on the 10th of May. And that was on OKX. And there's speculation happening that maybe finally you will see the Binance listing. Now, I always like to look at relative valuation charts, right? Because why do we get into an altcoin? We want to get outperformance over just plain buying Bitcoin. If we just want crypto exposure, we buy Bitcoin. We get into something like Pi in order to make more money. So it's all about risk-adjusted return. And here we've got one of those relative valuation charts. It's Pi relative to Bitcoin. And we saw a very nice rally initially, then subsequently a somewhat consistent underperformance. And this vertical line that we see here, this is when the whale bought those 70 million Pi. So that whale is now up 71%. It's always the same story. It's the big pockets, it's the whales that make most money, and most retail investors tend to lose over time. Now, why did the whale buy at that point? And why are we rallying suddenly like this? I believe some people might have bet on Pi underperforming long term. And if there's enough short interest in a token, something like a short squeeze happens. So a very quick appreciation of the price. Here's the first indication of this. On the spot market, we quote unquote only saw $500 million of trading volume. So that was on the leading exchange BitGet. But on the bets on the price, on the perpetual futures, we saw more than 1 billion of trading volume. So that was on Gate.io. And so when there's so much perpetual futures trading volume, very often people get liquidated. Okay, so let's work with this scenario. Let's say this is a short squeeze. Let's say the whale anticipated this, bought all of the supply, then manipulated the price up. Now all the shorts got squeezed. What happens next? Usually after the first short squeeze, we tend to see a secondary short squeeze because some people might enter a short just because of the rally. Once a secondary short squeeze is over, the price tends to deflate. Now, the larger a cryptocurrency is, the bigger its market cap is, the harder it becomes to manipulate the price upwards. So there is a ceiling of how much a cryptocurrency can be manipulated upwards. For example, check this out, right? This is Dogecoin. We had several short squeezes here as well. The rallies always happen extremely fast and sometimes they are connected with news. But yeah, this is where a lot of people get liquidated. Then we start the deflation and then we see the secondary squeeze and things continue to go down. Same over here, short squeeze, deflation, secondary squeeze, deflation. Or over here again, short squeeze, we go down, we squeeze again, we go down again. And so the most straightforward way to figure out how much higher Pi can potentially go is to just look at the relative valuation to Bitcoin in the past. So the peak was on the 27th of February. From the current price to that peak, Pi could go up by another 190% relative to Bitcoin again. With its current market cap, it would then reach 26 billion. So within the crypto rankings, it would be just above Tron. It would be in the top 10. The price would reach $3.65. Now, I'm not saying that the short squeeze will last all the way to that point, but latest by that point, it does make sense to bet on falling prices. Right now, the momentum is still bullish. We're probably going to see at least a secondary short squeeze, but it does make sense if you're currently long Pi to exit at least at this price. Since of course we all don't have a crystal ball, it probably makes sense to just take profit as the price continues to rise. Right? We never know where exactly the top is. We're just trying to buy what's cheap and sell what's expensive. And the more expensive an asset gets, the less we should hold it. So gradual selling does make sense. Now let's zoom out a little bit and have a look at the macro picture. We actually see an expanding crypto market, money flowing into the market since October of 2023 already. We know this because of this data over here, the stablecoin market cap. It's currently going up. Before October of 2023, it tended to go down. And the way this data is generated by looking at the minting and the redemption of stablecoins. So fundamentally how this works is when you deposit your hard-earned fiat currency to a centralized exchange, then that centralized exchange will send over the fiat currency to a custodian, to a stablecoin issuer. And that custodian, so be it USDC, so Circle, or Tether for USDT, that custodian will hold the funds in a dedicated account and then will create tokens. So that's what's happening when this chart is going up. Whenever you're withdrawing your funds, then of course the custodian has to release again the fiat, send it over to you via the centralized exchange, and that's when we go down. And there's a reasonable case to be made that the more money is in a system, the higher the prices should go. Have a look at this. This is Bitcoin since October of 2023. And the largest drawdown we have seen while money was still flowing into the market was 28%. But again, when money is flowing in, those dips tend to get bought up. Now, what are those green circles over here? They appear after a price rally. It's an indication when there's a lot of attention on crypto. So there was a spike in search interest for Bitcoin at the beginning of March of 2024, but also at the middle of November of 2024. So that's what's highlighted with those bubbles. The masses tend to be late. The masses tend to buy after a price rally. And that's a problem, right? Most people enter crypto when prices are high, and then potentially comes at least a short-term correction. And then a lot of those people that got excited about Bitcoin first have to ride through that correction. It can be minor, since currently the market still expands, but it can also be major, of course, as we have seen with prior attention spikes. And so there are two fundamental forces that move the crypto prices. First of all, it's the money in and outflows, but it's also the swapping activity. So once there's capital in the system, people tend to swap in and out of Bitcoin, but also in and out of the altcoins. And whenever we deploy, say, $100 worth of stable coins, the market cap of a crypto asset rises more than that. There is some inherent leverage effect. And that means we can measure how much the market is currently risk on or risk off. What we've got over here is the stablecoin dominance. So it's not the stablecoin market cap, it's the stablecoin dominance. It measures how much of the entire cryptocurrency market cap is currently in stablecoins. When this is very high, the market is risk off. So a lot of the market cap is in stablecoins. When this is very low, the market is very risk on. And in the last 1.5 years, we tended to trade in a range between 5% stablecoin dominance and 9% stablecoin dominance. And surprise, surprise, when the stablecoin dominance is high, it means crypto prices are very low. When the stablecoin dominance is low, crypto prices tend to be high. So interestingly enough, whenever the stablecoin dominance is low and when prices have already gone up, that's when the tourists enter and first get burned. So we want to be counter-cyclical. We want to sell when stablecoin dominance is low. We want to buy when stablecoin dominance is high. And it very much looks like we are currently on the way to seeing more stablecoin deployments. In other words, the current positive rally is probably going to continue. I don't have a crystal ball. It's just the way how I interpret the data. And then the question is, does it make sense to just buy Bitcoin if we expect prices to go up, or should we rather go with the altcoins? Now, some altcoins can do phenomenally. Others tend to underperform. But let's have a look at, for example, Virtual. Virtual went up by almost 3x in the last month. But I think it's better to try to find those altcoins very early. So the real gains had been made in the early days, right? When we look at the all-time chart of Virtual Protocol, those gains are immense. 20,000%. And so the life-changing money is not necessarily just in riding the current wave and buying a broad basket of altcoins. It's trying to find approaches to get into those altcoins much earlier than most. And I think a very good approach is to look at people that tended to buy well-performing assets early in the past. So for example here, right, this is Brian Young. He bought the Virtual Protocol token at 7 cents. And that was on the 21st of March 2024. So that's over here. We subsequently saw a rally of more than 6,000%. And so here's his YouTube channel, right? He's got more than 2 million subscribers. It of course begs the question, is Brian Young just more skilled, or does he have sufficient impact on the prices? Because maybe some of his following is buying into the token as well. I don't know, but it's always valuable to know what those kind of people are doing. The way how we knew about Brian Young buying into the token at that time was not because he announced it that early on his channel. It was because we track his wallets. We've got 5 of Brian Young's wallets. In total, we track almost 600 influencer wallets. So we've got also wallets by Alex Becker. He's got 1.6 million subscribers. We are also tracking the Crypto Banter channel. They've got 1.2 million subscribers. And again, I think it makes sense to be very early with the insiders and with the people that move the market. Now, of course, not every single token that's purchased by an influencer is going to rally. Some tokens are just bought and never announced on the social media, so we don't have the purchases by the following. But if you want to have a chance of being early, if you want to get the 10 or 20x returns, we can't just buy what's already big, right? We have to buy the things that the smart money is buying as well. And so here are a few examples of trades that our community has made. We discuss the influencer trades. We discuss potential opportunities to bet on rising, but also to bet on falling prices, depending on market conditions. And so, of course, we track our influencer wallets, but there's also a tutorial section on just how to find those influencer wallets. There are various approaches through NFTs, through related transactions, through deposit addresses on centralized exchanges. There are 8 tutorial videos in total. And so then the community is trying to figure out what wallets that we are not yet tracking can we potentially add to our bot. So there's a dedicated wallet research chat. We've just added influencer Chicken Genius. And then every day we get signals when influencers buy and sell. Selling is also important, right? Most people don't publish when they sell. It's very interesting. Some people just buy, publish a video on an asset, and then sell just a few hours afterwards. They're literally pumping and dumping on the audience. It's quite nice to look behind the scenes. And so feel free to check it out. It's down below. It's thebitcoinstrader.com. Currently the price is $125 per month. It went down because search interest in crypto is now rather low. Once we are up again, the price of course will get increased, but not for the people that are already subscribed. So once you sign up for 125, that price is locked in. So here's my recommendation. Don't wait until attention is again at those heights. We are still early. The market is expanding though. Macro is positive, but you don't want to wait until the rally has already happened. Right now, attention is still low. The rally is likely going to continue. As said, there's still money on the sidelines. The stablecoin dominance has room to further fall, which will result in rising altcoin prices. It's just about figuring out what altcoin has most upside. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. The link is down below, thebitcoinstrader.com. There should also be a link directly here on the screen where you click on that link, then it will lead you directly to the page. See you next time. Bye-bye.